Hey guys, welcome back. Lab Production here. So recently I overheard one of my coworkers tell one of her friends that she didn't have a credit card and she wasn't planning to get one anytime soon because she believed that they were pointless. I personally don't believe in this statement. That's why today I'll be telling you 3 reasons why you should apply for a credit card on your 18th birthday. Make sure you go ahead and tap the like button and subscribe to support this YouTube channel. And to thank all of you wonderful subscribers, here is a picture of a fluffy dog you can take into your sleep tonight. Now, without further ado, let's get to the 3 reasons. The very first reason you should get a credit card at 18 years old is so that you have insurance against fraud charges. Unlike debit cards, which come straight from your personal bank account, debit cards are funds that are lent to you through a line of credit by the lender. If your debit card gets stolen, you may be responsible for most, if not all, of the fraud charges on the card up to the point of report. A credit card is protected by the Fair Credit Billing Act. This law provides insurance to the credit consumer by limiting the liability to $50 as long as the fraud charge is reported within 60 days. Nowadays, many financial institutes even offer credit cards that guarantee zero liability for any fraudulent transactions. Online shoppers should really take this point to heart, as nearly half of Americans have fell victim to credit card theft in the past 5 years. The second reason you should get a credit card at 18 is so that you can take advantage of the cashback and reward systems that credit card companies offer. Most credit cards offer a sign-up bonus. For example, the Citi Premium Card is offering a limited time 80,000 points sign-up offer. The Chase Sapphire Reserve offers a 60,000 point welcome offer. By the way, these sign-up bonuses are worth at least $600 and $800 each respectively. But these are just the welcome offers. Once you receive the card on hand and start to use it towards your purchases, you will receive cashback or points depending on the card. Some popular choices among credit card users includes the Citi Double Cashback cards, which offers 2% back on all purchases. That equates to $20 back for every $1,000 spent. This reward might not seem like much on first look, but trust me, it adds up. The mighty Amex Gold card offers 4x points on dining and 4x points on grocery. The Chase Freedom Flex offers 5% back on certain categories rotated quarterly. Once you save up enough of these points, you can use these points to get cash back that apply to your account, or you can redeem them at a higher value by using them to buy gift cards or book travel flights or hotels. If you want maximum value for your points, you want to transfer these points to one of Chase's airline or hotel partner, as using these points in Chase's own shopping portal will yield lower value. The third reason you should get a credit card at 18 is so you can have a head start on building your credit. When you take out a loan in the future to buy a car or a house, a major portion of what decides your approval is the strength of your credit score. The lender wants to see that you are credible before they lend their money out to you. Oftentimes, if your credit or FICO score is anywhere near 800, the lender is willing to lend you the money at the lowest interest rate because you are very trustworthy. As opposed to if you had a low credit score, your interest rate would be very high. Only 1.6% of Americans have achieved this perfect 850 credit score. A homeowner with a $300,000 mortgage and a credit score between 760 and 850 has an average mortgage APR of 2.398%. They'll pay $1,179 a month on their mortgage. Now, let's take the same borrower, except his credit score is now 630 instead of 800. He'd be paying 4.047% APR on the same loan. That comes out to be a $1,400 monthly payment on the mortgage. Over the lifetime of the loan, the borrower with the 630 credit score is paying $78,300 more than a borrower with the 800 credit score. You can see that's a big difference. You can build your personal credit score in several ways, but two of the biggest factors are on-time payment and credit history. The other major category here has to deal with your credit usage, and we'll go deeper into that in a later video. Payment history is the most important factor and makes up 35% of your total credit score. It refers to consistently having a history of on-time payments. You must ensure no late payments, as just one overdue payment can cause your FICO score to drop significantly. After years of on-time payment, your FICO score will increase gradually. The other factor is credit history length. This simply tracks how long you've had this credit account open. The longer the account has been open, the more trustworthy you are to the lender. This is why you should open a credit card account as early as possible so that time is on your side. But if you don't believe me, listen to Kevin O'Leary's advice.
Okay, so right there is an important lesson, and I tell every millennial, it's good to get a credit card, put maybe a $1,000 limit on it, and then start paying off, use $200 a month and pay it off every month. So I told my son, as soon as he could get one, Trevor, put $50 on the card and pay it off. And now he's got a pristine credit rating, and he's only ever put a few $1,000s through the card. Everybody should understand that. There's no way to game that system. You've got to establish a credit rating, or you can't borrow.
Alright guys, that's all I have for you today. Hopefully I have convinced you to apply for a credit card. Feel free to post your questions down below in the comments. Hope you guys enjoy, and we'll see you in the next one.